What's up, everybody? What's going on? And hopefully, you're gonna having a great trading week coming up. And we are looking to see how to get over the emotional hurdle of losing and even winning a trade. So, let's say, for example, we were looking at a trade and we got into a trade, for example, a bad trade. Let's just stick with the losing trade. We got into a bad trade here and we shorted it, for example, over here in this area. And then we had a stop loss above here. And stop loss gets taken out, clear confirmation to get out of the trade, and you lost. So now one of the key things to look at is to look back to see your details of why you took that trade and not FOMO in as far as getting back into the trade quick or, you know, buying the trade just because, you got stopped out. It does not necessarily mean that no matter what, it's going back up. So, some key mistakes that a lot of beginners make is, they put a stop loss, they get taken out, they probably come back and they sell at us, because they were shorting here and they come back and they sell again at a higher position thinking that this thing is going to go back down. Not necessarily the case. Most of the time it does not happen. It does happen, but not a lot of times. So one of the hurdles to get over that fact that that's it, you're out of the trade and you need to move on. Either look for a different pair to trade or you stick to the same pair and you just see the details, what's going on. Maybe it is going higher and it's time to start going long instead of shorting. But the key factor is to take is don't bring emotions into it. Don't revenge trade. Don't trade with FOMO, fear of missing out. A lot of factors go into trading when it comes to the mental aspect of it. So when it comes to losing a trade, you need to sit back, see what you did wrong. If you can spot it quickly, that's great. You spotted it and don't do it again. Repetition is key to this. It brings a big understanding into the market once you have repetition and you spot things quickly because of the fact that it's happened to you. So, but the key factor is what you want to look for is not to let that emotionally affect you, because if you have a good strategy going for you and all of a sudden something goes against you, it does not mean your strategy is bad, because if you backtested this for months and months and months and sometimes even years backwards and you've seen that it was properly taken and the trade was properly based on data from the previous time, then you should notice that there's a pattern, and patterns most of the time, at least over 70%, work. So if you're losing, you know 30 40% of the time only on that specific strategy that you use, you are going to stay in profit. It's not good, but you're still going to stay in profit because you're sticking to that strategy. Another thing is, so that's about losing. So another thing is about winning. Don't think that you are invincible toward your trading. So some people might have a winning streak that has lasted for, a few days, week. Sometimes people have it for a few weeks, and they've taken 3, 4 trades a week and they haven't lost on a single one. And then all of a sudden, what happens is they start to increase their position by a lot, and their lot size goes up by a lot. And then there's just that one trade that goes against them, and they think that no matter what, it's going back into the direction that they picked. The problem with this is no one is right about the markets. 100% of the time. So you are not invisible. We can look at so much traders of, with great amounts of capital that even when they're in a small position, they're hesitant to get out of the position that they are in because of emotions. They will stick to the strategy. That's it. They have their strategy set. They have how much of amount they're willing to lose on that one specific trade that they took, and they won't go beyond it. They lose, they look for something else. They see what went wrong, and then they look on to something else. It it is okay to lose a trade. It is okay to be wrong about the market. No one is 100% right. So that's another key factor of don't let your head get overblown because you have winning streaks. Be humble, be happy that you have winning streaks. Also know why you have winning streaks. Why is it happening? Why is your strategy working? Backtest said, would it work in a different situation, a different market condition? Uh, these are key factors to look at. So, like, for example, nobody could have predicted that this would have happened. Even big boys couldn't have predicted this. Smart money couldn't have predicted this. This is just everybody in the market panicking, selling. So once it starts to panic sell, stop losses get hit. And then other people start to sell. They see that stop losses are getting hit, and they keep selling and it's selling and selling, and it drops. Does that mean that there was somebody who knew no matter what it was going to drop from here all the way down to here? No. But maybe somebody knew it was going to drop from here to here, or from here to here. It does not necessarily mean that because one person predicted a big sell-off that they are going to be 100% all right all the time, and these big smart money know that unless they're ignorant. But most of the cases, like for example, I'll give you an example. You can watch his video on YouTube. He shows that when he was younger, in I think it was the late 80s, he made a bad decision, Ray Dalio, and he made a bad decision on the market that it would collapse, and he just kept on shorting, and it would not collapse, even though his data was telling him. But the problem is the hype behind the market can play a factor, even though data is telling you that it should collapse. And he says, I was ignorant at the time. I didn't, listen to what the market was telling me. The market will tell you everything, what's happening in real time. So trade as if you are trading like a computer. So like a computer program, you programmed, every single detail what you want it to do. It will only do that. Trade like that. It doesn't get into emotions. Even if it won, even if it lost, it goes on to the next trade. If it sees that same pattern come up again, it'll take the same trade. Continue on, and don't think your strategy has failed you because you lost one or because you lost multiple trades. Another key factor to place is what to do to bring yourself physically and I would say spiritually into a state of clarity. So once you're trading, one of the things that I like to do is a breathing technique. Simple breathing technique is just before I take the trade, or even when I'm in a trade and I'm kind of questioning what's going on, I will do a breathing technique where sometimes I close my eyes, sometimes I keep my eyes open, where I breathe for about 14 times, long deep breaths and exhales, long deep and exhales, and I will have a clear mind. This is scientifically proven about what it does to the brain, where it kind of shuts down the flight or fight factor that we have in our brains. So I'm not emotionally trying to save myself or trying to fight the market. So that's one key way to look at it is, and I will do that, and it helps. I mean, of course, it doesn't help 100% of the time, but it does help. It keeps you calm in situations that maybe you might not be calm in. Another thing is that I like to step away from the computer if something keeps going against me and try to just relax. It could be as simple as meditation. It could be as simple as just maybe watching a, quick comedy, a 30-minute episode of whatever comedy you like to watch. Something that just kind of makes your brain go into shutdown mode so it, can relax. And that's pretty much what the mental side of things I like to look for, like a big sell off here. A lot of traders will keep selling, and they'll keep selling and keep selling, and then they'll keep selling. Even if it gets down to here, they'll keep selling. If you don't have a good strategy set up for yourself, you're gonna eventually get knocked out. Or the opposite, true. Keep buying because it keeps going up. It does not make no sense for somebody to do that unless you have a strategy set. You can keep selling here, you can sell here, you can sell here. If you're trading the candlesticks, you can sell here, you can sell here, sell here. But then as soon as, if you don't have a good strategy set up and it goes against you like that and you keep selling, now you're getting into territory where you're just guessing. And that will mess up your emotions about your strategy that you are taking. So a good key factor is be in a relaxed state. Try to be in a calm state when you're trading. Um, Remember, what you see in the movies about trading is not the reality of trading. Um, we're not talking in the actual pits of, the New York Stock Exchange or anything like that. We're talking like at the desk trading. That's not how, it is in reality. Emotions do fly and everything like that, but don't get me wrong. I get emotional about trades, and I'm not perfect. So everybody has emotions, but the thing is you have to try to control your emotions. That's the key that we could take from this video, and hopefully everybody has a great trading week and we can learn and stick together. Peace out.